Welcome everyone, this is Scramble from Emotionless Crypto Trading, and we're continuing our video series of educational content. Today's topic is going to be triple bottom, great for Forex, stock, futures, cryptocurrency traders out there. This is very useful for all of us in order to determine an entry point for the bulls. Now, this pattern has a probability of about 75% approximately, which is telling us the fact that it's worth to be used, because you all know that I've said multiple times there are patterns which are not worth to be used considering the low probability rate of their confirmation. Right, so today during this video we're going to learn everything you need to know about triple bottom. And the topics for today are: what is triple bottom, key points, what does a triple bottom tell you, rules, charts. Inside the charts zone, we've got the entry, exit, how do we recognize the triple bottom, disadvantages as well. We're going to talk about some great strategies around triple bottom and the way we should handle the entire trading activity when there is a triple bottom. Now, the first question is, what is a triple bottom? And we've got its definition right here. Is a bullish chart pattern used in technical analysis that's characterized by three equal lows followed by a breakout above the resistance level. Now, we can see that that image right there represents the way a triple bottom looks like and the way it needs to play out in order to be a confirmed pattern, because we all know there are false patterns which are just confirmed by 50%, and the other percentage that's left is no longer confirmed by the market. Therefore, that is not a completed pattern. In case of triple bottom, this is what it needs to happen in order to be fully completed, and we could call it at that time triple bottom. Right, so we've got the first part, which is the downtrend, the second part is the reversal formation, and the third part is the uptrend. That is based on parts considering the pattern. It is a must to have a downtrend. It is a must to have a reversal formation in order to have an uptrend. Attention, these things cannot be missed at all. Key points. A triple bottom is a visual pattern that shows the buyers, bulls, taking control of the price action from the sellers, bears. A triple bottom is generally seen as three roughly equal lows bouncing off support followed by three price action breaching resistance. The formation of triple bottom is seen as an opportunity to enter a bullish position, and the reason for that is the more bottoms we have, for example from the second one, from the double bottom already going into the third bottom zone, that tells us the fact that as soon as we get confirmed around the same support area, the bears have lost control over the market, and from there bulls are dominating it. What does a triple bottom tell you? Well, triple bottom chart pattern typically follows a prolonged downtrend where bears are in control of the market. While the first bottom could simply be normal price movement, the second bottom is indicative of the bulls gaining momentum and preparing for a possible reversal. The third bottom indicates that there is strong support in place and bears may capitulate when the price breaks through the resistance level. Attention, the capitulation appears when we break through the resistance levels. We're going to learn and see where those resistance levels are appearing. We can actually see that right here as well. The resistance level is the reversal formation red line. That's the one I'm talking about. We're going to see that over some other charts as well. But you see it has three parts. There is a prolonged downtrend where the bears are in control of the market. That's the first signal. It needs to be dominated during a specific period of time by the bears. We're talking about the market. Well, the first bottom just looks pretty much normal. There's nothing specific. The second bottom is already telling us that there is some sort of a strong support signal. The third bottom is confirming the strong support signal, and it plays out with a high possibility to break through the resistance level, which can be found at the top of the sideways movement. Right? The sideways movement in this case is the reversal formation. Let's go towards and talk about the rules. There should be an existing downtrend in place before the pattern occurs. It's one rule. The three lows should be roughly equal in price and spaced out from each other. Attention, there needs to be some time frame between them. It's not like three candlesticks are appearing one after the other and we've got a triple bottom out there. Not at all. Well, the price doesn't have to be exactly equal. This is a very important difference because some people think that the prices needs to be touched equally in order for the pattern to be confirmed, where it's not like that. It just needs to be roughly equal. So it needs to be around the same area with very small differences in price. But attention, it do not needs to be exactly equal, which is a very big difference. It should be reasonable close to the same price, such that a trend line is horizontal, and we're going to be able to recognize that once we move over the charts. The volume should drop through the pattern, throughout a pattern in a sign that bears are losing strength. Well, bullish volume should increase as the price breaks through the final resistance. So you will be able to see that the green color of the volume is dominating while the third bottom occurs, because that is the volume which is more powerful than the red one. The red one is for the bears. And of course it makes sense. That's why they were not able to break below the line of our support, which is horizontally forming the triple bottom. And we take control of the market, so we have more volume, we're dominating. And I'm sure that makes sense to you. Now charts, there are two ways of trading triple bottom. Let's just head over to charts and discuss about that right there. So here's the first case scenario we're going to discuss about today. It doesn't really matter at the pairs we're looking at, it matters to see the charts. Make sure you have the maximum size of this video on your screen in order to see all the details we're talking about. So put the full size on your entire screen. Great. The first thing I'd like to share with you is to let you know where the triple bottoms are located. That's the second, and here's the third. You see, we've got a area there. Prices are not exactly touched, and it's not a single candlestick that represents the entire bottom. There could be multiple candlesticks that represents a bottom, which is exactly the case for the first bottom right here. There are multiple candlesticks representing a single bottom, multiple candlesticks as well for the second one, and multiple for the third one as well, right? So do not expect to have a single candlestick and then spike out of there in matter of a few seconds and minutes, because that thing is not going to happen. Great. So there is a slight difference in the prices where the market is closing on these bottoms, you see, but what is the idea is that they're in the same area, and this is very important for our consideration. As a sideways movement, it needs to be in the same area. Now the big question is going to be also if it needs to be sideways or it could be slightly downtrended or uptrended. That's also another question. Well, in my opinion, if you would like to have a high accuracy rate, then you definitely need to search sideways bottoms. If the sideways bottom is confirming and it's appearing, then the pattern has a higher probability than a triple bottom pattern which has its bottoms not sideways. And that would look like for the third bottom to close somewhere here, right? So for the charts to continue down to this position and then create a very large area like this. Well, in that case scenario, we've got the first bottom going to the second and then the third one just like that. It is no longer an accurate triple bottom, and it decreases the chances heavily because we are no longer able to use right stop losses and right targets. Therefore, this pattern could be extremely difficult to be completed, right? So let me just erase that thing. Great. So we've understood how do we handle that. Now let's talk about the entry. There's two probabilities to trade a triple bottom. We're going to handle the first one, and the first one tells us that the pattern is going only into the bullish area at the time it breaks out on the previous high. The previous high in this case from the last bottom is this one right here. The last bottom is located on the right side down. And then the previous high pretty much exactly where I've encircled earlier or just right now. That is the top. Now from there we definitely need to draw a horizontal resistance line, and once we break out of that, then it's the time for the bears to take control over the market fully, and the pattern starts to complete itself. Now let me show you right here to see that the reversal formation, the sideways movement right here at the top of the third bottom, right here at the top of it, we've got this red line, and then once it breaks out, that's where the entry is for the first way of trading this. Exactly just like that. Now in order to see that, you definitely need to see everything else that should happen before, which is the downtrend section, this one right here. 1, 2, 3 bottoms sideways, tops confirming as well in a sideways movement, and then the third bottom has a spike that breaks out from the previous high, which is between the second and the third bottom, and that's located right here on our screen. Once you break out of that, then you enter into the bullish area, so that means you have to buy for long. That is one entry. The stop loss could be exactly right here where the pullback is located. Just like that. This is one strategy to handle. And of course, the target could be by looking left to see where we have heavy resistance points. And at this case scenario on this chart, this is where we have heavy resistance points. So this is what we should consider as targets. Our target is pretty much touched over here. So if we sell there, we've banked in pretty nice profits. This is strategy number 1, attention. Strategy number 2 has some other advantages, but some more disadvantages, because you can see right here from the triple bottom creation, there is a lot of the space till we're touching the resistance line, and then we'll break out of it. Right? So that space could be utilized in our advantage as long as we entry at the time of the third bottom establishment. And this is how the second strategy looks like, to buy in right here. Now that means when you have established the bottom after, the top after the second bottom, which is this one. This is the top after the second bottom. Once you have established the top after the second bottom, you could expect that the third bottom could appear, because you already see the first one, you see the second one, you see the second top as well, and then you expect a third bottom. So what you can do is you can put a buy order into the area and let that buy order sit there in order to get triggered. So if it gets triggered, you are going to have a very early entry point. And then if the pattern happens to be confirmed and to be established, then you will make plus 15-20% more. Depends, of course, from the type of trading we do, from the type of pair we're having, from the type of volatile market, right? So it depends, of course. But we're talking about average numbers here. So what that means? That means that you might have a very early entry, extremely early as possible. And there's no money are leaving on the table, but the risks are increasing because right now you're not in a bullish area. Attention, you're just in a secure, strong support area, which is totally different. You're only bullish at the time you break out of the resistance line, which is noted right here with blue. Okay, so you're only bullish right here when this green arrow appears. That's the only time you're bullish. If you're buying here in the third bottom by utilizing a limit order and setting up your limit order in advance, therefore whenever the market has movement over there, you are going to buy that automatically. That's what I'm suggesting when you do this pattern. But attention, that doesn't mean you're breaking out on the resistance line, because here you could face a top. and then establish a clear downtrend from there. Look at that. Just like that. And it makes sense because there is actually a downtrending resistance line there. So if you establish here a top and you're no longer breaking out, you have to be very careful about this resistance line and see if you're breaking out or not. Because if you do not, then you have to sell in a smaller profit, and that's all. But it's still nice because you made some profits. Right, so there is this risk involved, which is increasing the probability of fluctuations and of course decreasing the probability of your potential profits. As long as there are risks involved within the calculation you have to do between the rewards and losses ratio, you have to be careful of those and calculate them. Considering we have an earlier entry, it doesn't mean that we have higher probabilities to make money on the trade. We just have, as a percentage manner, more, but the probability needs to include the risk manner as well. So if we have high risks but high percentages, then it's kind of still the same game. It's just with higher numbers. And this is what strategy does in this case scenario. It increases the numbers. If you break out of this resistance trending line that I've marked with black, then of course you're making a lot more money than the first strategy because you bought earlier. And I prefer taking higher risks by going this way. As well as I might have a stop loss somewhere here. Right, so slightly below the area that formed the triple bottom. Great, that's where we put the stop loss. That's how we handle the second strategy. This is what we definitely need to know about. And here's one chart which I want to discuss about right now to ask you if you think that this is a triple bottom. One here, another one over here, and the third might appear over here. If this guy right here is a triple bottom or not. Well, we know that there needs to be a downtrend before the triple bottom, of course. And I can see that here we do not have any sort of a downtrending movement. So therefore, this is not a triple bottom. We're very clear on that as well. As well as the first bottom is not really horizontally with the other two. So that eliminates as well. You have to see all these details because they need to match in order for the pattern to be visible. Great. Well, that's pretty much all about today's video presentation. Feel free to subscribe to my YouTube channel. See the links in the description area if you want to become a professional trader for my one-on-one coaching. Hit the like button if you enjoyed this one. Share your opinions in the comments area and make sure to use this such a pattern because it brings benefits as long as you see all the data that needs and leads to such a pattern, right? So it needs to lead you to the pattern. Do not establish it, do your desires by looking at in a fancy way. You know, let the market to give you neutral data and look at the things as raw. Keep them simple. Because some people could transform this chart, that's why I wanted to give it an example, as triple bottom. If they are pretty much romantic, they could transform this as triple bottom. But that is not real at all. And we have explained why. That's pretty much all about. Thank you so much for watching. We'll talk to you soon in my next videos. I'm going to present you a lot more educational content about this chart, strategies, patterns, and things we must learn before we would get started into the trading space. Thank you so much. We'll talk to you soon.